Deepak Shenoy, on bad global days, we are falling because global markets are down. On good global days, we are not going up. Hello, you there?
Yeah, I can hear you. I'm
I
sorry.
just saw a shakeout in the screen. Were you there? Were you moving?
Yeah, no. My phone rang, some spam call. So
Okay. It must be eating our guest coordinator. Maybe you're late for the show. Don't worry,
apologies.
Deepak is here. And I can see him on the screen. Okay. Now my question is that why are we underperforming global markets so subtly? Is it numbers? Is it FI selling? What is the root reason?
I think, Nikunj, we've got some FII selling, so 100,000 crores plus 114,000 crores in the secondary markets last year, last month. So that is just in August alone. Of course, they bought 20,000 crores of Hyundai, so it will appear as 90,000 crores. So that's possibly one reason that's weighing in on markets. It's not a big problem because we're down, what, 7, 8%. We're not even down 10% from the top. Such a big sell would have otherwise realized a lot deeper, market losses earlier. It's also the fact that we've done well last year and the year before that comparatively to the world. So there's some kind of a mean reversion of sorts. Then lastly, the results have not been very exciting this quarter this far. I don't see anything major. I think some in the auto manufacturers also, we saw an increase in maybe one of the four-wheeler manufacturers. The two-wheelers have done reasonably well. Some of the agri commodities and agri inputs have done well. But outside of that, the financials, the even some of the industrials, they're more or less disappointed in terms of returns. So I think that has also played into sentiment. And then you have these big events happening, right? So you've got Iran, Israel, you've got American elections. Once those go past, I think global policy will kind of stabilize. I think that will kind of give us some kind of indication on the way forward. So I don't look this as a major problem. We're only down less than 10% from the top, so I don't think we should be too worried. It's just normal growing pangs.
Have you started shopping in the market?
Yes, finally, some of the stocks we've wanted to buy, they're down 30-40% from the top. So can't reveal too much right now, but we're actually adding more of the names that we've owned very little of in the past because they ran up too much. So we've been able to buy some more defense stocks, rejig some of the defense and the manufacturing portfolio, buy into some. We haven't yet bought into any consumer names meaningfully, but we do have some auto exposure, which has kindly corrected itself a little bit, so that gives us some options. So picking piece by piece, waiting for the rest of the results to come in. After November 15th, when all the results are in, we'll take final calls on a few sectors we want to get into.
Interesting. Kunal, anything on the charts where you think the selling is overdone and could be bought now?
So I think in that sense, maybe there could be a point where few of the auto stocks, and especially I think the likes of Maruti, for example, that stock is showing a lot of stabilization at the 11,000, 10,900 to 11,000 range where it's trading right now. So that maybe could be the first few names from the auto pack, which could make a very strong comeback. There are also some signs that many of the PSU names, and especially the PSU banking lot, they are the ones which are showing consistent recovery on an intraday basis, and especially the likes of SPI, the stock which is trading I think at 810, 820 levels. It's trading above the longer term average, and I think 4-5 days back there was this very strong bullish candlestick pattern for SPI. Post that, the stock has not caved into a selling pressure, but it's been a lot more sideways. But I believe that a breakout of this previous swing resistance could be in for SPI, and adding to the fact many of the other PSU banking names like Bank of Baroda using good strength and recovery from the other PSU banking lot, PNB, Canara Bank, even the non-FNO stocks like Bank of India, Bank of Union Bank, etc. These stocks are also showing some signs of strength.
Okay, banks where it is, where it seems like there is inherent strength. But Deepak, what is it that you would not touch in this market, be it on decline and you may have already exited in the past month and a half?
One of the things that we've kind of slowed down or not had too much exposure to is NBFCs for the most part, and definitely not microfinance. I think the numbers that are showing on personal loans in general, so NBFC is exposed to large amounts of personal loans, unsecured personal loans, credit card companies, and there's only one really, so nothing meaningful else there. But also microfinance lenders. The issue is when RBI puts a clamp down on new lending and starts talking to people, first thing that happen is people who are borrowing tend to renew their loans either to the same provider or through a different NBFC. And then when they're not allowed the opportunity to do so because risk weights have gone up and RBI has kind of clamped down on a few of the players, then what happens really is the defaults start piling up. You're seeing that in the numbers. You're seeing everybody talk about stress. So I think that's one sector I'm like carefully avoiding for now. Though I think the larger banks, they have more diversified portfolios and therefore they have more room to operate. So I think they are a better play right now than the NBFCs and microfinance players. But it may soon come to a point where the worst kind of goes behind them, and then they will be priced low enough for you to be able to get into the recovery. So it's an interesting point where I'd say don't buy them now, but they may be coming soon to a point where they're worth buying. The risk is worth the reward.
How would you approach Capex stocks now? Because government spending has been low, but the indications which we're getting from the government is that they are committed to spend and they want to pretty much meet the expenditure targets, which means that next 3 to 6 months, big government spending should come out, whether it's road, railway, cement, steel, everyone will benefit. Is there a trade in cyclicals and Capex now?
Yeah, it should happen this quarter because I think we were expecting that last quarter it'll increase because the budget came in. You got out of the election rut, the election spending because of the election. The first quarter spending was low. The second quarter has been okay. I think we're going to get large amount of spending in the third, and usually in the fourth quarter there isn't much of spending because the government just wants to spend what it has already budgeted. So I think we'll get some accelerated spending in this quarter and perhaps a little more in the next. So we should see most of the industrials, especially those doing capex in that format, will start to improve. What will precede this is some form of credit growth to industrials. That has not really meaningfully happened yet, but I think it's starting to happen. We're seeing early signs of it. So I think we should see an increase in bank credit to the industrial sector. We should start seeing more of these orders flow through in terms of completion. And I think defense capex will take over in the next few months, regardless of what budgets are like because of geopolitical concerns. So regardless, I think that would be a good sector to look at from a capex perspective. Some of them are valued very richly, so you have to be very careful of what you buy. But I think longer term, there's a lot of scope here. Government spending will fuel some part of capex. Private capex has not really meaningfully moved so far, but it's starting to. You're seeing, semiconductor-based capex. We're seeing some bunch of other areas starting to pick up. So think of it as you're watching paint dry. So it will happen slowly. It will happen before we know it, and therefore it's useful to pick up stocks now and kind of ride this through. We have a lot of players in this space, so very biased on capex and infrastructure.
Best play, is it L&T? Is it a road company? Is it railways? Because the word Capex means everything.
It does. In fact, I think you'll be good to have an exposure to a lot of things. When you look at core infrastructure, it's roads, ports, airports. They're players in all of them. If you look at infrastructure from a digital perspective, that there also there's a lot of players who are providing services to, say, stock markets, to companies, to insurance companies, and to insurance players, and so on. So each of these players actually will do well in different parts of the game. Defense and auto, I think, are primary recipients because they're relatively large employers and contribute in a way to kind of security of the country in terms of self-sufficiency. So they will be in focus of the country no matter what. But either ways, I would say there will be action in this space going forward because if Trump comes in, there may be tariffs that are placed, counter tariffs on Indian companies. Auto companies benefit a lot from the 100% tariffs we have on foreign imports, for instance. So that might be negotiated or worked around. So there are lots of things in flux, but I think here's where you want a little bit of each of these pies sitting on your book. I don't think I would bet on just one of them because they will all do well, but at different times in the next few years.
Interesting. Okay, Deepak, hold on to that thought. Lots more to chat about with you, but for now, we're going to take a very quick break. Let's just revisit what the Nifty level is settling in at. Back at 24,000, but that's only for the Nifty futures. We're still struggling sub that mark for the Nifty spot, although a smidge of a recovery, about 100 odd points from the lows of the day. Continue tracking markets on the other side.
Well, in conversation with our expert, Soni Patnaik also joins us as Assistant Vice President with GM Financial Services. Soni, the market is taking support at key levels in and around 24,000. Do you think we have a trading bottom in place?
Hi, good afternoon, Nikunj. Thank you for having me on your show. I think it will be more important to watch the closing for today. If the closing can be above 24,000, then there could be a temporary bottoming out above which Nifty can see a short covering towards 24,200, 24,400 range. So it is very important for Nifty to give a closing above 24,000. Well, right now, what's saving Nifty is mostly the pullback that we can see coming in from Bank Nifty, which has actually held on to its support of 51,000. So there's a high probability for Bank Nifty to hold on to the 51,000 support, and above that, you can see it heading in the range again between 51,000 to 52,000. So as long as Bank Nifty is not breaking below 51,000, there's a possibility that Nifty also may struggle, but 23,800, 23,700 is the immediate support to look for. And any close above 24,000 will give you confirmation of a temporary bottoming out, above which we can see some short coverage.
Okay, that's the take coming in the index. Just want to mark a couple of movers as well. And M&M, amidst the entire auto pack, that's clearly shown leadership today. It's a 2.25% uptick that you're seeing on M&M, reacting perhaps to the monthly sales data. And barring a little bit of a correction that the stock has seen, Kunal, fairly resilient, you would have to say, amidst all the volatility which has happened within the auto pack, M&M that is.
Well, absolutely, yes. And I think it's been one of the standout performers in the leg of correction, as well as in the the previous legs when the markets were doing exceptionally well for themselves. So I think on both counts, the stock has done reasonably well. And so these are the kind of stocks which recovers the first when markets get into any kind of any whiff of a recovery or a start of a uptrend or a bounce in that sense. So I would probably believe that stocks like M&M are the first ones which generally traders they latch on to whenever there is any expectation of a recovery on the markets. So far, what's also positive for M&M is that the stock is now on the verge of closing above its 50-day moving average. The last time when the stock did this, a couple of months back in the month of August or September first half is where you'd seen the stock moving up from 2,800 levels to almost 3,100, 3,200 plus mark. So expecting the stock to be a lot more stable once it's confirms the closing above this 50 DMA.
Deepak, where would you pick and choose within the auto pack? Because now that the Motown report card is out for the month of October, for M&M, of course, both the auto as well as the tractor divisions have done pretty okay. They've seen an uptick of about almost 20%, the auto sales that is total. For Tata Motors as well, the sales are not bad at all. It's versus an expectation of a decline, so an inline set as well would be treated as positive, I'm guessing. For Eicher, of course, they've reported the higher monthly sales ever and an uptick of about almost 31% on a year-on-year basis for Royal Enfield in particular. Hero MotoCorp as well, best ever sales for Dhanteras. For TVS, it's an inline set. For Hyundai, it's an uptick of about almost 2%. Exports, of course, have done much better. And for Ola Electric as well, as surprising as it may be, they've managed to sell about 50,000 odd units in the month of October. Where would you pick and choose within auto, if at all you would be wanting to get exposed to the space or maybe add on to the existing positions?
So Aisha, we've had a considerable position in M&M, so very biased there. But we've been waiting for the two-wheeler pop to happen for a long time. It's finally showing some signs. Even though Hero MotoCorp, which is one of the largest selling here, I think the largest selling two-wheeler manufacturer, still hasn't gotten back to that 7 lakh vehicles per month level, which we saw, I think, more than 5 years ago. So in that sense, it's been a long recovery. And to a certain extent, the two-wheeler electric manufacturers have come in and taken over the part of that space. So, but I think here, between TVS and Hero MotoCorp and Bajaj, TVS looks the most attractive of them all. I would say, having an exposure in both two-wheeler and four-wheeler, and of course the tractors and the space would actually add a lot of value. Eicher, I guess, has been more, premium motorcycles. So we've finally started to see an uptick over there as well. It's taken a while. So I think we might pick up some positions after some time on two-wheelers, but we're maintaining, M&M on the four-wheelers. Haven't done much on CV, haven't done much on tractors. But M&M is a larger play than two-wheelers, so it's or four-wheelers. It's really a pronged play, including defense and a bunch of their holdings in Tech Mahindra and a bunch of other things. So it's a more broadly diversified play than pure this thing. I don't think I touched Tata Motors for now, given the geopolitics. And Maruti's numbers have been very disappointing this month specifically. So not really keen on that stock either.
So this whole talk of a Motown slowdown, is it in the price? Is it something which markets need to price in further? What is your sense there?
So my belief, Nikunj, there is a lot of things that we think are in the price, but when data changes, suddenly you find that it's not. Prices have moved up a lot before any of the fundamentals have. In this last month is when we've seen two-wheeler numbers start to move, but two-wheeler stock prices started to move from 6 months ago. So in that sense, I think the stocks have very high expectations of whatever the numbers are. The Motown slowdown is probably going to result in lower sales going forward because they record the sales to dealerships. Dealerships take loans and put the cars in their own inventory, and the sales are recorded at the manufacturer's end. However, if the inventory buildup is too much, you're going to see that some of this going forward, the sales are going to be lower. If that happens in November and December, then we know that this is a serious problem. Otherwise, if there's actually good sales happening, whatever numbers we're talking about as 79,000-80,000 crores is not meaningfully large. We just look at them as large because they're larger compared to earlier, but our GDP has also grown considerably. So 79,000 crores of inventory across the country is not meaningfully large actually in India's context. We would normally start having that level of inventory if the sales were to pick up meaningfully from here anyways.
Deepak, you track Reliance, the magnifying glass, and this is one position which everybody's asking why. What has changed suddenly in last 45 days that Reliance has really come under the hammer, so to speak?
So something I think from a slowdown perspective has happened in terms of their retail offering. They've talked about it. Jio has reached a certain level of maturity, and of course you've got a telecom issue with terms of the sales are not rising as much as they used to be, and because they've raised prices, so a lot of people are giving up second or additional connections as well, and you can see that in the telecom data. These are the two big areas. The oil and gas business is largely a business of refining margins, which changes on a regular basis. So that is not really dependable. So that's why maybe there's been a little bit of lower interest in the stock, but I feel there is a lot more potential here. They have a lot more value add inside their businesses than is visible from the outside. So if they were able to at some point demerge the individual businesses, they could all grow independently of each other. I haven't seen any indication of the above happening. It's been 4 years since we started thinking that this will happen. But I think that is what's going to unlock value here and a clearer process of where they move forward. They're doing all the right things. They're setting up data centers, AI technology, hydrogen-based fuel, a lot of new gen technology, which the smaller players aren't really getting into. But I think this is not meaningfully priced in because it's such a large enterprise. These things will add really relatively small value. It's over time that we're going to see all of this come, and I think at some level you need a demerger for these businesses to kind of get valued independently on their own as well.
Yep, waiting for that. Been a long wait and the market has only been talking about it. But Deepak, good chatting with you as always. Thanks for taking the time out.
If you like this video, then like, share and subscribe to ET Now.